my gut feel is that over the next few months, you may see anywhere from a 20, 30, 40% carnage in small cap, mid cap stocks, or certainly mutual funds in NEVs. The other big problem is that in our industry of mutual funds, we got a license from SEBI that said AMC, Asset Management Company. We believe a lot of our colleagues, peers in the industry are AGC, Asset Gathering Companies. If you look at the amount of money that has gone into small cap funds over the last 4 or 5 years, it's shocking. And the gatekeepers, the mutual fund managers, did not shut the gates and say, you're giving me too much money, I can no longer manage it, please don't give me more capital. They just kept on taking the money because that gave them fees. And if you look at the portfolios of these small cap funds, look at the number of stocks they owned in 2019, in 2020, 21, 22, 23, 24. It's gone from, in one case I know, from 80 stocks to 230 stocks. So the track record which you bought with 80 stocks is not the track record they're giving you today. They just kept on buying stocks because they gave them money. They never stopped it. So they've been buying illiquid stocks. They have illiquid stocks in the portfolio. We had studied the top 5 small cap funds in India about a year ago, and we found that in the top 10 holdings, there were certain stocks that would take 3,000 days to exit. 3,000 days in a market that has 220 trading days in a year is 14 and a half years. 14 and a half years. So when you redeem from that small cap fund, they have to sell. And when they sell something which is so illiquid, they're going to destroy the price. If they destroy the price, they destroy the NAV. All this has already happened after Lehman. Small cap, mid cap funds and stocks were down 70, 80% after the Lehman crisis, after Lehman bankruptcy. So we're back maybe in a similar, cycle, or the end of a cycle. But having said that, you've seen some of the ratios that we've shown. The larger cap stocks have got a higher share of, I've got a higher share of profits, but I've got a smaller share of market cap. That's showing that there's opportunity in the larger caps more than in the small caps and the mid cap. Of course, there will always be a quality name that is good in small cap, mid cap, large cap. So I'm just talking about in general. You'll always find a gem here or there. This is that chart where the small and mid caps in the top row, there's a circle on the extreme right. It says 35%. So the small caps and mid caps, their market cap share is 35%, which is the highest ever. And their profit share in the lower table is 41%, which is the lowest ever. And it's an inverse for the large caps, right? Their profit share is the highest ever, which is the bottom table at 59% for large caps. And the market cap share is the lowest ever. So there's an opportunity there. So they'll fall because if you are a small cap fund, you are allowed to own large caps. When a redemption comes, you will first sell the large cap because it's liquid and it doesn't impact your NAV too much. But how many large caps do you have? Once you begin to sell that, and if the redemption continues, you will then sell the small cap. And then when you sell those illiquid small caps, you'll cause destruction as was caused in 2008. It's nothing new. Mark Twain said, right, history doesn't repeat, just rhymes.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.